Welcome to the Techno Fundamental Report for June the 19th. We're doing this a day early simply because of the holiday. We have Juneteenth on Thursday. Nothing is easy, but who wants nothing? Donald Trump, kind of an interesting statement. Scott Bessent, who is our current Treasury Secretary, is being considered as a possible Federal Reserve chair. Now, I'm very impressed with Scott Bessent. He's a very successful hedge fund manager that is working for us in Washington as our Treasury Secretary. He's very active in the negotiations for tariffs, on the tariffs. His attitude, I believe, and this is just my opinion, that he's a big believer in survival of the fittest, meaning that Home Depot and Amazon have indicated that they will not pass on tariff costs to consumers. So the companies that pass on those costs will have higher prices, whereas Home Depot and Amazon, I believe, is going to make up the difference in volume because, if you got the lowest price, you're going to get the biggest sales. So like Charles Darwin said in 1809, it is not the strongest of the species that survives, nor the most intelligent, but the one most responsive to change. So if these companies out there cannot adjust to the tariffs, they're going to lose market share and they're going to lose sales volume. Now, inflation is not caused by tariffs. It's caused by the printing of money. So this is the M2 money supply. Since 1960, this thing has done nothing but go up, and it's about to hit a new high. So what they're doing is they're basically taxing us by printing more money. It's got to stop. Venture private investment in artificial intelligence reached a record $150 billion in 2024, nearly doubling from 2023 levels. Now, we have a very concentrated approach to this, and what we're looking at is what we call artificial intelligence infrastructure. So we would say this is an area that should do well. Now, remember, the projected growth rate in earnings over the next 10 years, the S&P is projected to grow roughly 10% a year for the next next 12 months. However, technology, due to AI, is projected to grow 18%. So our portfolio has a big emphasis on technology. Now, we use a system called SNAC, S-N-N-C, SNAC. It's an acronym. It's kind of corny. But what we say is that we want to know what the story is, and mainly with the story, we want to know who the management team is and if they're doing anything new. Now, on the numbers, we look at the balance sheet, we look at the income statement, we look at cash flow. We want to see solid numbers there. But as important is the chart. So it's story, numbers, and chart. So let's look at the charts on the indexes. Now, remember that when the market is in an uptrend, you have a 75% possibility of doing well. If the market is in a downtrend, there's a 75% probability that you're not going to do well. So right now, we are in an uptrend. We feel that the market made a major low back here on April the 7th, and we really have rallied, and now we're starting to consolidate the gains somewhat. So what we would like to see, again, is a breakout up here. If we break out down here, we'll have to deal with it. But right now, the trend is up. Now, S&P 500, same thing. We've got the low here on April the 7th. We are in an uptrend. On the primary trend, which is the 200-day moving average, we're still above the 200-day. With all that's going on, the war in Israel, the tariffs, the whole deal, we are in an uptrend above the 200-day. Very positive. Inflation, consumer price index, you can see that over the last 4 years, it has really been a difficult situation. So the Fed's got a tough job to do, but they've got inflation down as of the most recent numbers to 2.3% on the consumer price index, and their goal is 2%. So Jerome Powell, I believe, is doing a pretty good job, but he had his problems with calling inflation transitory and so forth. But, like Confucius says, if you make a mistake and you don't correct that mistake, you've made a mistake. So Jerome Powell, I think, is an excellent Fed chairman, And if Trump appoints somebody after him, it's going to be somebody that's probably going to want to lower interest rates. This is the unemployment rate. You can just see it's just steady, 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 4.2%, which is basically full employment. Here's the aggression index. Again, we're comparing technology to defensive staples. And you can see here we got a relative new high here. So the market's looking pretty good to me. Here's Treasury bonds. This is the 5-year Treasury yield. Very important, because I believe the market concentrates basically on two things, and most important is corporate earnings. And then secondly, interest rates are important. So interest rates have really stabilized here. You can see our power index is below zero in a very positive way, saying that for the last 125 days, interest rates on the 5-year Treasury have dropped 6%. That's what we're looking for. Here's the 10-year. And the 10-year is flat for the last 125 days, but it's a little bit longer term bond, but it's stable. That's what you need. You need stable interest rates. Volatility index, we kind of, it kind of picked up a little bit here, but pulled back below 21, which is kind of a critical area, but looks perfectly fine. Price of oil has spiked here. We've gotten a spike due to this Iran conflict. People are worried about, the war expanding and so forth. So the price of oil has moved up, which is not a big problem at this point, but it is a problem. So I would keep an eye on the price of oil. If you have any questions, please let me know. Thank you very much.